Assalamu alaikum wa rahmatullahi wa barakatuhu. Welcome to Islamically webinar 11. First of all, I'd like to apologize that we had to cancel last weekend's webinar at the last moment. We're going to continue with the same topic this week, and the topic is that we're going to examine Islamically Sharia criteria vis-a-vis the most popular Sharia criteria in the world. We will wait for a couple of minutes before everybody joins in. Alhamdulillah, we have got very good registrations, and I'm very happy with the way Islamically is progressing. As usual, this will have two parts. First, I will go ahead and talk about what we are trying to do in this webinar. That is, we're going to discuss a comparative study between the Islamically Sharia criteria versus the other most popular Sharia criteria in the world. And then the second half of this will be, I will take your questions, and inshallah, I'll try and answer those questions. The same process. Keep putting your questions in the chat functions on the right, and at the end of it, we will inshallah take all the questions. All right. And for those who have not yet subscribed to Islamically, please do so. We are coming up with very exciting offers for the next 3 days. Inshallah, it is going to start off from Monday till Wednesday for specific markets only. And this is to celebrate the Islamic New Year. So let me also wish all of us the beginning of the Islamic New Year. May Allah bless us this year, and let's hope that this year will be better than last year and we are more practicing than last year. And I hope everybody is safe and practicing social distancing. Alhamdulillah, a couple of people have joined in. Just a minute or two and we will jump into the topic. In the meanwhile, if you have any questions, please keep putting it up on the chat function. That's on your right hand side, and we will answer those questions. A couple of things as well before I start, and we wait for a couple of more people to join in. Very soon, we are going to launch a completely revamped app that's going to come up in just a couple of weeks, less than a couple of weeks, and you will enjoy the new Islamically experience. A couple of more things have been added to the desktop version to make it easier for people to use. More functions are in the pipeline. It's been about 3 months that the desktop version has been launched, and it's becoming more stable. We have a good pipeline that we have in terms of giving you more and more features on the desktop as well as on the app. But yes, the app is completely getting revamped, and you will enjoy the experience of using Islamically again. This is going to come up in just a couple of weeks. So that this is just a heads up for all the unique people who have taken the pains of joining us in the webinar over here. All right, without taking much of time, it's been 5 minutes that we have been waiting for people to join in. Let's start digging in. I'll share my screen. All right, this is the topic that we have today. So Islamic Sharia Screening Criteria versus some of the other more popular Sharia Screening Criteria. It's mentioned that we will be speaking for about 2 hours, but I think it's not that big of a topic. It should get over in about 90 minutes or so. So yes, I'll probably take about half an hour to 40 minutes initially to speak about the topic. And then we will dedicate about 30 minutes to 20 to 30 minutes to answering your questions. All right, let's get started. Thank you for joining us. This seems to be a decent audience today. I will straight away share my slide, and this is it. As you can see, we are going to compare the screening criteria of Islamically versus AOP versus S&P versus Dow Jones versus SC Malaysia. These, I feel, are the most popular screening criteria in the world. Although there are more screening criteria in the world, let's say example from MSCI, from FTSE, from the indexes in Pakistan. Then there are other criteria being used in Qatar, in Saudi, in Dubai. But these five, I believe, are the most popular screening criteria in the world, and let's study them together. The way I have classified my Excel sheet over here is there are common exclusions between all the Sharia criteria. Then there are unique exclusions. Then we can go ahead and study the threshold. And then the most important question that a lot of people have, whether interest income is included in the threshold or not, and if there are any special notes to be observed. So this will give you a comprehensive view as to what we are going to study today and what I'm going to be speaking about. Now, the first sheet, or the first cell over here tells you that irrespective of whether you're looking at the Islamically screening criteria or the AOP screening criteria, the S&P, the Dow Jones, or the SC Malaysia screening criteria, they have a common exclusion. So as we studied in detail in the last webinar, from a sector screening perspective, the common exclusions are alcohol, definitely swine or pork, tobacco, gambling, conventional financial services, and conventional and adult entertainment, as well as pornography. So I'll just make a small change on this one. So this is conventional financial services, whereas Islamic financial services is considered Sharia compliant. All right. So whether it's Islamically, AOP, S&P, Dow Jones, or SC Malaysia, all of them say that these are the sectors from which are prohibited, and for a company to be considered as Sharia compliant, they should not be involved in these companies, in these sectors. Now let's look at the unique exclusions. Now S&P as well as this one, Islamically as well as the S&P have an additional negative screening criteria, which says that if a company derives revenue from hedging gold and silver production or trading, it will be considered a non-permissible revenue item. That means if a company is into gold mining or silver mining, or in gold and silver trading, and they have hedged their production, or they have hedged their sales contracts against a specific price, the revenue coming from that will be considered non-permissible. This screening criteria is not available under AOP, under Dow Jones, or SC Malaysia. This is unique to S&P as well as Islamically. The other unique thing that needs to be looked into is, although I have mentioned that alcohol, swine, tobacco, gambling, conventional financial services, conventional and adult entertainment, pornography, as well as pornography, is also the exclusion criteria for AOP, but in their standard, the exclusions are not defined. This one, as I've written in my note, the exclusions are not defined. Let me show it to you. This is the Sharia standard number 21, financial paper, shares and bonds of AOP. As you can see, section 3(4) over here. I'll expand this a little bit and centralize it. There you go. I think you can read it now. So over here, if you read this standard, participation or trading for investment and trading in the shares of corporations whose primary business activity is permissible but they make deposits or borrow on the basis of interest. So as you see, this paragraph talks about the exclusions, right? So the fundamental rule is that of prohibition of acquiring shares of and transactions, investment and trading, in the shares of corporations that sometimes undertake transactions in riba and other prohibited things, even when their primary activity is permissible. But from this rule, subscription and transaction are exempted with the following conditions. So this lists what are the exclusions from the EOFI perspective. The first thing is that the corporation does not state in its memorandum of association that one of its objectives is to deal in interest or in prohibited goods or materials like pork and the like. So if you can see this one, they made a very general statement as to what are the excluded business activities. That means the prohibited goods or materials like pork, soy, and the like. They haven't gone ahead and specifically mentioned whether alcohol is non-compliant, whether conventional financial services is non-compliant, whether conventional entertainment is considered non-permissible, whether weapons are considered non-permissible. So EOFI has just given a very broad guideline as to what is considered permissible and what is not considered permissible. Hence, in my comparison, I have mentioned specifically that exclusions are not defined over here. Although it is generally accepted that definitely from an Islamic perspective, any company which deals in alcohol, wine, tobacco, gambling, conventional financial services, as well as conventional and adult entertainment, as well as pornography, will be considered non-permissible, right? So I've also shown you the accounting, the standard which talks about this in the EOFI standards. If I have to make it smaller and take you through this one, as you can see, this is the EOFI standards cover, and the rule is mentioned on this page. Standard number 3/4 over here. All right, now let's move on. Under Dow Jones, there is a specific mention that if a company is in the trade of manufacturing weapons, arms, and ammunition, that sector is also considered non-permissible from the Dow Jones Sharia perspective, Sharia scholars' perspective. Okay, let me also show you the Dow Jones fatwa. This is the Dow Jones fatwa. As you can see, point number E is what they mentioned, that defense industries, manufacturers of weapons, contractors, suppliers of offensive components and systems. So this point number E is an exclusive exclusion only by the Dow Jones Sharia board. Now, a lot of people who also follow the EOFI Sharia criteria say that weapons is also considered non-permissible. As I've explained in my previous webinar, that is webinar number 10, where, as well as webinar number 9, where we have gone ahead and studied in detail as to why these exclusions are given out. So for people who want to refer in detail as to what these exclusions are, please go to webinar 10 as well as webinar 9 and see it up. It's available on Islamicly YouTube channel. And you can hear us out as to what are the details. So in terms of Dow Jones, they have a special exclusion, which is weapons. Now coming on to the last Sharia criteria, which we are comparing today. So SC Malaysia has this criteria, which is non-halal food and beverages. Now a lot of people must be thinking that why is it only that SC Malaysia considers non-halal food and beverages to be non-permissible? It should be a common exclusion across all. Islamically, EOFI, S&P, and Dow Jones have specifically mentioned that alcohol, wine, tobacco are the consumable items which will be considered non-halal, which will be considered non-permissible. But here, SC Malaysia says that non-halal food and beverages will also form part of the non-permissible activities. Now, what is the meaning of this? Now, the Sharia scholars say that if a company is into food activities and is not dealing in alcohol and is not dealing in swine or is not dealing in tobacco, then the revenue from that business activity will be considered Sharia permissible. Now, the tricky thing that needs to be considered over here is, let's say, for example, there is the essential question over here is whether the food item, especially in terms of meat, has been slaughtered in a halal manner or not. So this is not being considered by all the Sharia scholars board except SC Malaysia. Hence, SC Malaysia has put in that non-halal food and beverages will be taken out. So let's say, for example, somebody is selling chicken, processed chicken, and that processed chicken is not slaughtered in a halal manner, then SC Malaysia considered that revenue to be non-permissible, whereas every other Sharia committee as of now considers a business activity from that segment to be Sharia permissible from an investment perspective. Definitely, they are not saying that consumption of non-halal slaughtered meat is permissible, but from a business activity perspective, as of now, they have given permission that you can invest in such businesses. All right. So I believe that we've covered both of these. So there are common exclusions and there are unique exclusions across certain Sharia boards. Now let's study another line item, which is what is the threshold. So if you see, Islamically has a 5% threshold, and that threshold is 5% of operating income. That means all the non-permissible activities should contribute less than 5% of the total income of the company. But these items, that is alcohol, swine, tobacco, gambling, financial services, or from pornography or adult entertainment, the revenue should be coming in from the operating activity of the business, right? That means if interest income is accruing to the company and interest income is not part of the operating income of the company, then this will not be considered part of the 5% operating income threshold. Clear? I will speak more when I move on to the next row. But the threshold for Islamically is 5% of operating income. Similar threshold is for AOFI, it is 5% of operating income. S&P as well is similar. Dow Jones is also similar. Now, SC Malaysia has a different view of looking at things. So they have categorized things into two parts. So certain items, they allow a threshold of 5%, whereas some other items, they allow a threshold of 20%. Right? Now, I've listed down what are these 20% threshold in this part. So 20% threshold is applicable on the following. Okay, which is hotel and resorts, share trading, stockbroking businesses, rental received from Sharia non-compliant activities, and other activities deemed non-compliant according to Sharia. Now, this is again a pretty vague term. It depends on the interpreter, but nonetheless. So 5% threshold is applicable on alcohol, swine, tobacco, gambling, conventional financial services, adult entertainment, and pornography, whereas a 20% threshold is applicable on revenues coming in from hotel and resort operations, share trading, stockbroking businesses, rental received from Sharia non-compliant activities, as well as any other activities which are not defined on top or defined under the 20% threshold will come under the 20% threshold itself. So SC Malaysia is a unique criteria which has two thresholds, a 5% as well as a 20%. For some activities, the 5% threshold is applicable, whereas for the others, the 20% threshold is applicable. All right. Now let's study another critical question which a lot of people keep asking us, that whether interest income accrued to a company is part of the 5% threshold or not. So let us study what most Sharia scholars or most Sharia criteria say. I have mentioned over here that Islamically does not consider interest income as part of the 5% threshold. AOFI also does not consider it. I have given an explanation over here. I'll speak about it in a bit. S&P also does not consider interest income as part of the 5% threshold. Dow Jones also does not consider it, whereas SC Malaysia does consider it. That means SC Malaysia says that all non-permissible activities of the company, whether operating or non-operating, should be less than 5% of the threshold. They have specifically mentioned about it over here. As you can see, they've said in this line item. So this means that specifically as well, if a company derives any non-permissible revenues, whether it be operating or non-operating, it will be considered as part of the 5% threshold. And the 20% threshold is separate for them. Now, another thing that a lot of people say is AOFI also says the same thing. That means AOFI also says that interest income, irrespective of the fact that it is coming in from an operating activity or coming in from a non-operating side, will be considered as part of the 5% threshold. Now, the wordings of the AOFI standard can lead a person to that conclusion, but Islamically has spoken, as we have mentioned earlier as well, that we have spoken to the Sharia scholars who were part of the AOFI standards board, which set this standard up, have clearly mentioned to us that it was never the intention of the Sharia scholars on the AOFI standards board to include non-operating interest income as part of the 5% threshold. Let's bring up the standard which talks about that. It is 3/4/4, which talks about it. So if I have to read that, it says that the amount of income generated from prohibited component does not exceed 5% of the total income of the corporation, irrespective of the income being generated by undertaking a prohibited activity, by ownership of a prohibited asset, or in some other way. If a source of income is not properly disclosed, then more effort is to be exerted for identification thereof, giving due care and caution in this respect. By reading of this, it means that all non-permissible incomes, whether operating or non-operating, has to be considered as part of the 5% threshold. If the accumulation of all operating and non-operating non-permissible incomes exceed 5%, the company will be considered Sharia non-permissible from its business activity perspective. But the clarification that the Sharia scholars who were part of the AOFI standards board said that no, you should not screen that way. You should segregate operating and non-operating activities. That's exactly what Islamically does, and the Islamically screening criteria clearly defines it, in the sense that it says that if a company is deriving interest income by way of an operating business activity, that means the activity of lending money, the activity of its stated business activity to be in the business of interest-based financial services, or in the course of its stated business, it is getting such interest income, it will definitely be considered part of the 5% threshold. But if a company is not in the business of generating interest income, but does get interest income by virtue of its cash management policies, by virtue of its liquidity management policies, then that interest income will not be considered part of the 5% threshold. All right. So that is it as part of the sector screening criteria. So let's go again. There are common exclusions. There are unique exclusions. The threshold is similar for all the screening criteria except SC Malaysia, which is 5% and 20%. Interest income, by virtue of all clarifications in Islamically, AOFI, S&P, Dow Jones, should not be considered as part of its threshold of 5%, whereas SC Malaysia does consider all non-permissible incomes, whether operating or non-operating, as part of its thresholds. The last part gives you the clarification for the AOFI criteria as well as for SC Malaysia criteria. Right? Now, this all leads to certain differences in the output of companies being classified as compliant or non-compliant. But since the criteria is not very different, this specifically should not lead to a lot of differences in classifying a company as compliant or non-compliant. Right? So sector screening criteria across all Sharia standards is almost the same, leading to very few differences in the ultimate result of whether a stock is compliant or not according to all of these criteria. The main difference why a stock is classified differently across these Sharia standards is because of its financial ratios. Let's look at those. And here I have given the same thing: Islamically, AOFI, S&P, Dow Jones, SC Malaysia. Right? I have also put in what is the denominator that they use for the financial ratios. How do they measure the denominator? What is the numerator again? The numerator will be debt, cash, and accounts receivables. All right. So let's see what is the denominators for Islamically. So Islamically uses market cap. AOFI also uses market cap. S&P also uses market cap. Dow Jones also uses market cap. SC Malaysia uses total assets. Right? Now let's see, what does market cap mean? Islamically uses a 36 months average market cap. AOFI is actually silent on it. If I have to bring it, so AOFI says over here, if you can read it, that the collective amount raised as loan on interest, whether long-term or short-term debt, does not exceed 30% of the market capitalization of the corporation. So here they are just using the term market capitalization of the corporation. They have not mentioned as to how this market capitalization has to be computed. So hence I have assumed that it is current market capitalization. That means day end today. S&P also uses a 36 months average market capitalization. Dow Jones uses a slightly smaller one, so they average out the market capitalization over 24 months. SC Malaysia, there is no concept of moving average because it's a total assets. Total assets will definitely be based on the disclosed total assets of the company on a quarterly or a 6 monthly basis. We will study that a little later. So the total assets will be simple. It will, for SC Malaysia, it will be given out by the company itself in their financial statements. Now, what is the numerator? So let's look at the debt. So there are three ratios that are usually used across all criteria: debt, cash, and accounts receivables. So the debt ratio, that is the total debt of the company divided by the 36 months average market cap for the company, should be less than 33%. Right? We've given more explanations in the previous webinar. So you can refer to webinar number 10 if you have to understand more about these ratios. This webinar is focused only on the comparison. Hence, the threshold over here for Islamically is 33%. The threshold in AOFI is 30%, as we've seen the standard just a bit back. The threshold of S&P is 33%, same as Islamically. The threshold for Dow Jones is also 33%, but if you see, it's 33% of 24 months market capitalization. The threshold for the debt ratio for SC Malaysia is 30%. Here again you have to note total debt divided by total assets for SC Malaysia, and the threshold is 30%. Let's move on. For cash on Islamically, it is 33%. For AOF, it's 30%. For S&P, is 33%. Dow Jones is again 33%. SC Malaysia is at 30%. Now, accounts receivables is a ratio which not many scholars have incorporated into the Shariah screening criteria. Islamically has it. So the accounts receivables of the company to its 36-month average market capitalization should be less than 49%. No such criteria exists in AOF. S&P also follows the 49% threshold for accounts receivables. Dow Jones has a 33% threshold. Let's see the Dow Jones criteria. This is the Dow Jones criteria, and it's mentioned in their summary out here. Accounts receivables to total market capitalization cannot exceed 33%. Right? Although the word over here is used total market capitalization, it has been defined in the criteria that it should be 24 months. I'll try and bring it out. It must be mentioned in this place somewhere. The 24 months market capitalization. Yeah, it's here. I found it at one place, calculated as 24 months. As you can see my cursor, accounts receivables, the market capitalization calculated as 24 months average. All right. Hence, this is a 33%. All right. SC Malaysia does not have an accounts receivables ratio. Okay. So before I move on to the last point, let me recap this. Islamically uses market cap. AOF also uses market cap. S&P uses market cap. The Dow Jones uses market cap, whereas SC Malaysia uses total assets. Right? The moving average which is used is Islamically uses 36 months. AOF, since nothing is mentioned, it uses current. S&P uses 36 months. Dow Jones, as we just saw, also uses 24 months from their fatwa. SC Malaysia, the moving average is not applicable because it's on total assets. The ratios are debt. So total interest-bearing debt to 36 months average market capitalization should be 33% in Islamically, 30% in AOF, 33% in S&P, 33% in Dow Jones, and 30% to total assets for SC Malaysia. Similarly, stuff for cash and accounts receivables is only applicable for Islamically criteria, S&P criteria, and Dow Jones criteria. AOF is silent on accounts receivables, hence this ratio is not applicable. SC Malaysia is also silent on it. That means they do not have a ratio for measuring accounts receivables to total assets. All right. And the last point is, how does this ratios get affected? And all of these ratios will lead to change in compliance. Since the Islamically is based on market cap, right? And market cap changes on a daily basis, Islamically updates its compliance on a daily basis, right? That means the share prices at the day end changes, and the 36 months average market capitalization till end of day today is calculated and updated. And hence, on a daily basis on your apps at about 12 noon your local time, you get a notification that things have changed. That today's changes, 2 stocks have changed compliance and 3 stocks have turned non-compliant. You get a notification, and that helps you keep track whether your stocks are in continuous compliance or not. That's the unique feature that Islamically has on its platforms. Moving on to AOF, since this also uses market cap, So all the apps as well as screening providers who are giving you AOP criteria should ideally also update it daily. Moving on, although S&P also uses market capitalization, but since it's mostly a B2B product and it's an index product, rebalancing an index on a daily basis will be a nightmare. Hence, their Shariah committee has given them approval that they can update their screening on a monthly basis because they are an index provider. Hence, they update it on a monthly basis. Dow Jones, again an index provider, updates it quarterly. So if a stock has changed compliance in the month of April, you will get an update about it only in the month of July. That is, they update it every quarter. SC Malaysia uses an even bigger time frame to update. So they update on a half-yearly basis. That is May and November. As you can see over here, these are the lists that SC Malaysia gives out of Shariah compliant securities. So they come up in May, they come up in November. Again, May and November. So once in 6 months is what they update. All right. So this is the differences between the financial ratios between Islamically, EOP, S&P, Dow Jones, SC Malaysia, which are the most popular screening criteria in the world. Now, this financial ratios is the key reason that stocks will have different compliances across different Shariah criteria. Now, the next question that a lot of people might be asking is, which Shariah criteria do we follow? Right? Is Islamically correct? Is EOP correct? Is S&P correct? Is Dow Jones correct? Or is SC Malaysia correct? As I have always mentioned in my previous webinars as well as in our forum discussions, it is best to stick to one school of thought, that is one Shariah criteria, and follow it as given out by that service provider. If you want to follow AOP, or you want to follow Islamically, or you want to follow SC Malaysia, follow one screening criteria and do not get influenced by somebody else. Yes, I'm not talking about mistakes or errors in terms of research. I'm not talking about that. I'm talking about results which have been adequately researched basis the criteria and the compliance has been given out. Follow one screening criteria and just invest according to that screening criteria. Do not take the best of two worlds, or do not have a combination of the best of all of these Shariah criteria. That is what our suggestion is. Okay, so this is a very simple pictorial tabular presentation as to what is the difference between screening criteria across the most popular screening criteria. So this is the business sector criteria, and this is the financial ratio comparison. And this is it in terms of what I had to speak about today. I will stop sharing my screen. Right. We have a couple of questions which have already come in. So essentially, there is no such thing as the right screening criteria or the wrong screening criteria. All Sharia scholars have put in considerable amount of efforts into building a Sharia criteria. Yes, there are other screening criteria as well. Let's say, for example, there's Mizan Pakistan, which is followed Mizan Bank's index. The KMI, which is followed in Pakistan. We've not covered that that criteria because it's only exclusively concentrated to Pakistan, and there are just about 50-55 stocks in that universe. The last I checked, I'm not sure about it though. Then there's MSCI and there's FTSE screening criteria as well. Then there are a couple of them, which is about Bloomberg and Reuters, but we don't have a lot of popularity with them because S&P and Dow Jones are the leading Sharia index providers. On the other hand, SE Malaysia is doing a fantastic job in terms of bringing out a list of stocks which are screened, and they are progressing the mandate of Islamic investments. And AOFI being the premier body which is putting in a lot of effort in bringing up the entire field of Islamic investments. Hence, we have compared that, and Islamically, because that's our criteria that we are following. I'll quickly start jumping into the questions. And start answering them. Before that, as I mentioned, the best use that you can do of Islamically is definitely to subscribe. Alhamdulillah, there are a lot of people who are on this webinar. If you have not subscribed, please do subscribe. Keep looking out. We have very exciting offers coming up starting Monday, Tuesday, and Wednesday. Please look out for it. You will get an email exclusively about that offer. And that's the best opportunity. And this is for the Islamic New Year. We're giving out special discounts starting Monday, Tuesday, Wednesday, celebrating the Islamic Hijri. And as I've mentioned, it is essential that if you like us, you should subscribe to us. It gives us support and also helps you manage your investments in a Sharia compliant manner, because it has got a lot of tools which help you in terms of managing your Sharia compliant investments. And believe me, this is the cheapest way that you can manage a Sharia compliant equity portfolio. Have a broking account, have an Islamically account, sync your portfolios in between both of these, and you can ensure that your investments are always in compliance to Sharia. Islamically will give you instant notifications as to when a stock changes compliance so that you can move out of it. Islamically will instantly notify you if a stock that you're interested in was previously non-compliant and has become compliant. Our web version gives you a lot more functionalities. That is, if you are a new user of Islamically, you already had an existing portfolio, and when you start using Islamically, you figure out some stocks are compliant and some are not, but you have already invested in them. Instead of just going ahead and selling those positions, what you should do is check the historical compliance of it. It may be so that it has recently turned non-compliant, but when you invested in it, it might have been compliant. So the desktop version gives you all the historical features. It also gives you futuristic views, an estimation as to whether the stock is likely to remain compliant or unlikely to remain compliant through a feature called compliance risk factor. Plus, as we have mentioned, we are going to release the advanced holding options so that you have a bigger and a more elaborate holding option, holdings update option that a lot of people had asked for. It is in testing and inshallah will be released very soon, only on the desktop version and not on the app version. All right. Another thing is, if you like what we are doing, please do review us on the app stores. We really need some reviews on the app stores. So the iOS stores as well as the app store, please do write us a review. It will help us in terms of passing the message on to a lot of new users who are trying to get the most credible information about Sharia compliance of stocks. All right. Cool. Let's start answering your questions. If you have any questions, whether related to today's session or related to any of the previous sessions or related to how to use the app, the floor is now open to ask the questions. We do not allow people to speak up because it will consume a lot of time. Just post your questions on the chat function and I will inshallah answer every question before we sign off. So we have a good, alhamdulillah, 40-45 minutes to answer these questions, and I will answer each one of them. Okay, SM is asking me, the couple of people might have faced a couple of technical issues. I'm not sure why. I'm getting everything is okay over here. Even my colleagues monitoring the webinar also do not have any issues. So not sure. Starting thing is someone has asked us, is it possible to receive the presentation afterwards? Every Islamically webinar is recorded, so this is also recorded. And this will be shared on the Islamically YouTube channel. As you can see, I will also try and bring that up. Sorry. Let me bring that up on my screen right away so that you can see what we are talking about. As you can see, this is the Islamically YouTube channel. All the webinars have been posted over here. So webinar 5 is here. We had a masterclass on understanding Shariah Equity. That's here. Another one is here. How does Islamically conduct Sharia financial screening? Is here. This is webinar 10. Again, webinar 7 is here. If you see the entire list, all of it is here. So webinar 3 is here. Webinar 4 is here. 6 is here. And the previous ones, the Ask Me Anything ones that we used to do initially, all of it is here. So there are lots of content. Everything is published on our YouTube channel for you to review it as you go along. All right. So all of this will be available for you to review later as well. No problem. Someone is asking me, what about TASIS from India? Yes, TASIS is also one of the credible service providers over here. They have a very different screening criteria. We haven't, one of my colleagues also points out that you can even go to the playlist. So if you're wanting to look only at the webinars in the YouTube channel, just open the playlist and all the webinars are listed together. So you can skip and look at the webinar that you're trying to look out for. That's one. Coming back to the question of TASIS, yes, TASIS is also a very credible service provider from India. They have a very different screening criteria, whereas of what I understand, they have zero tolerance to any of the non-permissible activities. Plus, so that means if a company is involved in a non-permissible activity and the revenue that they derive is like, let's say 1%, it will be considered non-permissible, and this company will not be allowed for investment. So they have a zero tolerance to non-permissible income. As far as interest income is concerned, they have a 3% tolerance for interest income to total income. So they have a very different screening criteria, and that is the difference between everybody else. So most of the screening criteria, as we have seen, have a 5% threshold, except SC Malaysia, which has 5 and 20%. TASIS has a 0% threshold for non-permissible activities. So that's the difference between TASIS and everybody else. Brother Rizwan is asking us, is intraday halal or haram? Intraday trading is permissible, subject to the conditions. Please look out for our webinar on intraday trading, as well as a blog which talks about rules of trading on our portal, as well as on the app, which will give you clearly what are the rules of trading. Essentially, intraday trading is permissible if you buy first and sell later, but when you buy, the condition to be fulfilled has to be checked with your broker, in which he will tell you, or the broker will tell you, that at what point you become the owner of that stock. Becoming the owner of the stock and taking delivery is different things. Do not confuse yourself between these two. If a couple of brokers tell you that if I give you an email confirmation and the money is deducted from your bank account, then you become the owner of the stock, all rights and obligations of that stock lies with you now. Yes, in delivery might take a little bit more time. This is a bigger topic. We have discussed this in many of our previous webinars, as well as very, very explicitly. If you go to the webinar that has discussed intraday trading on our YouTube channel, as I showed you now, you will get a more detailed explanation. Also, there are a couple of chats on the discussion forum on the app where there's more elaborate view as to why intraday trading and under what circumstances intraday trading is permissible. So short answer, intraday trading is permissible if you satisfy the condition that of your broker. At that point in time, you can immediately sell, whether that is within a minute or a second, depends on the way the brokers give you access. All right, so intraday trading is definitely permissible. Okay, Syed Mohiuddin has asked the question, alcohol is not permissible. However, as per Islamically, Andhra sugar is a Sharia compliant stock. Note that molasses is a byproduct of sugar industry which is used in alcohol production. Please explain. Very good question. Islamically definitely looks at all sugar producing companies and looks at how they are treating their byproduct, that is the molasses. Now, there are two things that the Sharia scholars have told us about what needs to be done about income generated by sugar industries from selling molasses. If a sugar manufacturer is selling molasses, revenue from selling molasses, which is a byproduct of sugar production, is not considered a blanket non-permissible revenue. I repeat myself, sales of molasses is not on a blanket basis considered non-permissible. It is not, right? Unless it is specifically mentioned or we get to know from the company management that sales of this molasses has been done to alcohol manufacturers. Only in that scenario, the revenue from sales of molasses will be considered non-permissible. That's the level of detail that Islamically goes into. We know there are so many sugar manufacturers globally which consciously do not sell its molasses to any of the alcohol manufacturers, consciously, right? Molasses as a product is not exclusively used for alcohol manufacturing. Molasses as a product can be used in various other applications in the pharmaceutical industry, in the energy segment, especially with a lot of governments now coming up with thresholds that car fuel should consist of percentage of ethanol. A lot of molasses nowadays is being used by such petroleum products manufacturers as well, right? So for the specific company that you have mentioned, which is Andhra Sugar, the best I can do is I can have a relook at that, get my research team to have a relook at that, and inshallah we'll reply. We will update the screening if we have made an error on Andhra Sugar. But from a principal perspective, sales of molasses is not considered a blanket non-permissible activity, as I explained. Okay, someone has asked us what is AOFI. AOFI essentially is the premier body which is trying to standardize all the rules of Islamic finance. So AOFI comes up with Sharia standards, and one of the Sharia standards, AOFI standards number 21, shares and bonds, talks about equity investments and what are the rules of investments in equities. And that is what we have compared in this webinar. AOFI has a full-fledged website, which is now in English as well. So please go have a look at that if you need to know more about AOFI. Okay, brother Sohail is asking us, will the company use non-operating income in running business? Every income comes to the company, whether operating or non-operating. Yes, the company definitely utilizes the revenue it generates out of the non-operating income, but there's a difference between judging a company Sharia compliant for investment basis its operating income and giving cognizance to non-operating income, right? The way the Sharia scholars have said, if you look at our articles on our blog as well as on the app about dividend purification, it clearly says that, as well as the article on Moderna, there's a big discussion that I have clearly mentioned as to what is this whole debate about operating income and non-operating income. What the Sharia scholars say is operating income should be less than 5% from non-permissible activities. If you combine the non-operating income from non-permissible activities, both the non-permissible incomes, that is non-permissible income from operating activity, non-permissible income from non-operating activity should be combined and the percentage should be taken out. And this is the amount that you need to purify on the dividends that you receive from the company, right? So that means interest income, which is non-operating in nature, is also accounted for and is used to purify the returns that you get out of dividends received from that company. Hence, we are not ignoring the interest income, which is definitely a non-permissible activity and a non-permissible income. But if it is non-operating, it does not affect the sector compliance. If it is operating, it definitely affects the Sharia compliance of the company. Clear? Let's move on. Brother Khalid is asking a question, why 33% or 30% debt should be zero to be Sharia compliant? Ideally, yes, any interest bearing debt in a Sharia compliant company should be zero. But the way the modern financial setup is there, getting access to debt, which is an essential part of a company's operation, a company's growth story, getting Islamic debt or having a zero debt operation is going to disadvantage the company management. Additionally, because there are gearing ratios and return on investments, return on equity, if you look at those ratios as well, I do not want to get into details on that. Companies want to give a good return on equity to its shareholders, hence they also rely on debt, right? As you can see, the classic example of Reliance Industries, it is massively cash rich, but it still has a massive amount of debt. This is because they want to give a good return on equity ratio, right? So it's not that they can manage their operation without having a single rupee as debt, but they still like to have debt and have those gearing ratios in sync, right? So to answer your question, the Sharia scholars have allowed 33% or 30% threshold of the company's debt to be taken as non-permissible, as interest-bearing debt, keeping in mind that most of the companies, when we say most, it's 99.99% of companies listed globally, have no option other than taking debt on an interest-bearing basis. Hence, to allow Islamic investments into such companies, a standards has been fixed up, which restricts the total debt to be less than 30% or 33%. Some scholars think 30% is more than enough. Some scholars think that 33% is more than enough, not beyond this. And inshallah, as more and more Islamic investments grow, as we become more participative in the entire Islamic finance ecosystem, we will inshallah have more and more businesses give out interest-free loans or Islamic loans, and companies will emerge having debt which is non-interest bearing. Please do note that in all the Sharia criteria, the debt to be considered is interest-bearing debt. If a company has taken Islamic debt, that does not count in the ratio calculation. All right? That is the rationale that 33% is allowed and zero debt is not a criteria. Someone is asking us, can you share these documents as standards, please? AOFI standards is available on the AOFI website. All the other standard, the Malaysian SC standard is available on the SC website. The Dow Jones standard is available on the Dow Jones website. The S&P standard is available on the S&P website. Right? All of these standards are available publicly. I'm not having access to any of the privately held documents. Someone is asking us that someone else labels Apple status as questionable while Islamically screens Apple as Sharia compliant. Why the difference? This is exactly what we are trying to get at. There could be two reasons for differences. I've always been saying this. One is because the difference in Sharia criteria, right? So if someone else is using a different Sharia criteria, whereas Islamically is using some other Sharia criteria, there could be a difference in compliance. What you should do in that case is follow one standard and just follow their compliance. The other reason for differences in screening or results could be the depth in which people go, the more experience that people have in terms of looking at companies. Islamically gives out clear-cut compliance information basis their 15 years of research experience, and they have been able to get answers directly from various company managements. Hence, we are very clear in terms of what we assign as compliant or non-compliant. That's the answer. Aisha has put a question. I feel SC Malaysia criteria is a safer and logical approach when individuals are asked to avoid interest from savings accounts and give it off if received. How can we invest in companies that may have any amount of interest income from non-operating sources? I've said this many a times. Reason this has been allowed, that is interest-bearing debt is allowed, interest-generating cash investments is allowed, because we do not live in an environment which has easy access to Islamic cash deposit schemes or Islamic debt accessibility. To increase the participation of Muslims, the Sharia scholars have said that let's restrict these kind of activities to a certain threshold. Hence, the thresholds have been brought up. If you are referring to the total assets approach that SC Malaysia takes, vis-a-vis every other scholar, every other Sharia board criteria, which takes market capitalization, there is a research, there is a small paper, that article that has been given out on the Islamically blog, which talks about market capitalization versus total assets. The advantages of using market capitalization over total assets has been given out. This has also been discussed very, very explicitly in various Sharia boards, that they have also considered total assets over total market capitalization. A lot of Sharia scholars and a lot of Sharia boards initially were on total assets, and now they're convinced that market capitalization is a better standard to measure the compliance of companies from a financial screening perspective. For example, Dow Jones, which was the pioneer in the entire screening space, they were the first to launch a Sharia compliant index in the year 1999. They were initially using total assets as a criteria, and they have now moved to market capitalization. So there is a difference between why it is allowed in this specific realm, that is in investment in equities, whereas in personal life it is different. So there are different ways and means through which Sharia scholars think, and we need to respect their knowledge when they have allowed this. It is not allowed because they don't think that interest income is non-permissible. They clearly think interest income is non-permissible. But in this space, and due to the constraints that are there, this is allowed, and it is allowed in a controlled manner. I hope that answers the question. There's another question from Jewel. Can you do debt divided by total assets? SC Malaysia criteria does that. TASIS criteria does that. So whatever criteria you're using will tell you what is the total debt divided by, whether on market cap or on total assets. Syed says that why some use 30% and some 33%. Some scholars think that 1/3 is more than enough, hence they use 33%, whereas some scholars say that 1/3 has to be rounded off to the nearest nearest tens. Hence, they use 30%. And it's a scholar-driven view. Some scholar boards think that 1/3 means 30%, whereas other scholars say that it should be precisely 33%. Hence, there's a difference between 30% and 33%. Some other scholars say 25%. Jules is asking what is meant by cash. As I said in the previous webinar, we have discussed this in detail as to what is meant by cash, what is meant by debt, what is meant by accounts receivables. Nonetheless, on the Islamicly.com website, on the screening criteria, you can clearly see what are the components of cash. I'll bring it up as well right away so that you can have a look at it as to what is meant by cash. You can see here, this is the screening criteria of Islamically, and we've given out the complete meaning of what is meant by cash, what is included and what is not included. Yep. All right, moving on to the next question. Brother Syed says, also I believe Islamically scholars follow AOP criteria. Okay, let's talk about this. AOP criteria and Islamic criteria, Islamically criteria is not very different. Okay, AOP criteria is the base criteria, and Islamically criteria is an extension of that. Both of them use market capitalization. Both of them use a 5% threshold. There is no fundamental difference between Islamically criteria and the AOP criteria. The only difference is Islamically criteria is more dynamic. That means that Islamically is actively engaged with the leading Sharia scholars board and actively engages in discussions with the Sharia scholars to get answers about things which have not been clearly spelled out in the AOP criteria. Hence, it is an extension but not very divergent. That is what we believe. In addition to that, the scholars who are essentially the key scholars in the AOP standards board are also the leading scholars on the Islamically Sharia board as well. Let's say, for example, Dr. Muhammad Al-Ghari, who is the chairman of Islamically Sharia board, is also in the Sharia standards board of AOP. Okay. Brother Faris is asking more details about accounts receivables. Brother Faris, please do have a watch of webinar 10 as well as our website, which talks about accounts receivables as well. Let me bring that up. And this is it, as you can see. Financial ratio, leverage, compliance, accounts receivables is not very explicitly given over here. No worries. The rationale about why. Stop sharing my screen. The rationale about why accounts receivables is kept as a screening criteria is the Sharia scholars believe that if a company is deriving a certain value and more than 49% of that value is not realized, Muslim investors should stay away from such companies, right? So if a company has a value of 100 and receivables of that company is 49, that means a good half of the company's value is not realized. Hence, Muslim investors should stay away from it. This happens in very few cases, especially in companies which are involved in government contracting jobs, wherein they account for a lot of sales, but the monies is not realized for those sales. Hence, accounts receivables will be more than 49% in those companies. And that's the rationale that the Sharia scholars have quoted for keeping this criteria up. Brother Sohail is asking us a question. What is Islamically school of thought? Our Sharia scholars are from all schools of thought, and Alhamdulillah, as of now, this screening criteria thing, the equity investment part, has not been divided into schools of thought. Across the majority, it is accepted. The Sharia scholars are having acceptance in the West, in the Middle East, in the Far East as well. And the Sharia screening criteria is independent of school of thought as now. A brother says that some scholars prefer total assets for debt ratio and market cap for the rest. What do you think? It's the Sharia scholars' thought. I mean, debt is also correct. Total assets is also correct. Any benchmark has to be taken into account. The second thing that I'd like to tell about financial ratios is the financial ratio screening first came about in 1999. Previous to that, there was screening criteria. The Islamic Bank was established in the year in 1970s. They were also providing a screening criteria. But before 1999, only the business side of things were looked into, and the financial side of things were not looked into. The scholars made a criteria to look at the financial side, and some scholars have said that let's go with assets. Some said let's go with market cap. But there is growing consensus that market cap is better, and I put up an article as well as to why there is logic in terms of market capitalization is a better parameter over total assets, and the majority of Sharia scholars are moving towards total market capitalization, as well as you can see with the EOFI standards board as well, which has the biggest Sharia standards, the Sharia scholars board. Brother Moise has asked a question, why have we not mentioned FTSE and MSCI? One, I wanted to keep the presentation simple. Two, FTSE and MSCI, I don't see a retail product which is following FTSE and MSCI criteria. Hence, I have not included FTSE and MSCI criteria. Waqar has asked a question, what about non-operating interest income? Where does it get accounted? As I've answered earlier as well, non-operating interest income also gets accounted. So all non-permissible incomes from operating activities is taken, plus all non-permissible incomes from non-operating activities is also taken and added up, and we get a total. Essentially, all non-permissible activities, whether operating or non-operating, is taken, divided by total revenue of the company, and this becomes the purification ratio, which has to be applied on the dividends that you receive from a Sharia compliant company, and hence purify that dividends to the extent of this ratio. Okay, this purification ratio should not be applied on capital gains, because capital gains you're getting on a product or a stock which has been classified as compliant, and that's the end of the story. It is not conditionally compliant. It is compliant, means compliant. Any returns from a compliant adjudged product or investment has to be, the return is completely halal in that sense. Only the purification has to be applied on the dividends that you receive, and that's, the Sharia scholars are pretty clear on this. Jewel has asked a question, how long can you hold on to a stock after it is non-compliant? If a stock has turned non-compliant, you have 90 days to sell out from that stock, divided into two parts, the first 30 and the rest 60. The first 30 days you can wait to see if the stock turns compliant again. If it turns compliant, then you're as good as you were before, no action is required. But even after the expiry of the 30 days, the stock still remains non-compliant, you will have to sell the stock within 60 days. All capital gains that you got from the time the stock turned non-compliant till the time you sold the stock has to be purified. That means has to be donated. Any dividends that you received from this day the stock turned non-compliant till the 30th day has to be purified using the purification which is given on the app. Any dividends that you receive from the end of the 30th day till the day you sold the stock has to be purified completely. That is 100% of that dividend has to be donated. Aisha says, I am already a subscriber, but now that I know the screening criteria, I'm not comfortable with some of the criteria. What do I do? As we've said, and as we tell everyone, that follow one screening criteria and stick to that. Don't be in the middle of two criteria and don't follow two different criteria, right? Now, there is another thing that everyone needs to understand is the reputation of the scholars involved in coming up with a Sharia criteria. Have a look at the scholars who have certified one screening criteria versus the other screening criteria. Look at their backgrounds and come up with your own conclusion as to who do you think would be having more expertise. It's something very similar, right? There are doctors, right? There are engineers, there are chartered accountants, there are professionals, but there are lawyers. Can you say that an opinion or the expert advice of all of these guys is of the same quality? Usually not, right? You usually have, what do I say, have certain lawyers, certain accountants, certain doctors whose opinions you would regard in a much more credible manner than vis-a-vis the other peers of theirs. It's the same thing with any professional, right? I'm not saying that the scholars of A is superior and the scholars of B are inferior. Why should I say that? Every scholar is reputed. Alhamdulillah, they have taken the efforts of looking at these things and coming up with a decision which is best to their knowledge. It is up to us to pick one and go for it. That is what we suggest, and that is what all the scholars also suggest, that if you think that what we have given out a pronunciation, that our criteria should look this way, if you have an objection to that, we definitely do study all the objections, but the opinion of the board is on this side, but you think this other opinion also is nice, please go with that. Simple as that. Rupsi has asked a question, how does Islamically treat interest income? I've answered that. Interest income, whether operating or non-operating, is definitely considered non-permissible. If it is operating income, it gets accounted for in the 5% threshold for ascertaining the business sector compliance. How does this whole thing happen? Look at the previous webinar where we speak in detail about it. That's webinar 9 and 10. If it is a non-permissible, if it is a non-operating interest income, then it does not get accounted for while calculating the sector permissibility of the business, but it gets accounted for in the purification ratio and applied on the dividends received, and you need to purify that dividend. That's how interest income is accounted for. All right, I'll try and wrap this up in another 15 minutes. Brother Shahid is asking me, can you please say the reason why there is no need to purify the money received from capital appreciation and why only from dividend? I think I've already spoken about this, but I'll answer this again. Once a stock is considered Sharia compliant and you are getting returns from trading of it, right? Hence, the returns that you get from trading of it is considered Sharia compliant. But if you get a dividend, the interest income which was there or the impure income which was the company was getting, the dividends that you receive also has a component of that impure income. Reasonably assuming that the non-permissible component of the dividend is in proportion to the non-permissible income of the company. Hence, the purification ratio is calculated accordingly and applied on the dividend so that that proportion of impure income is removed and donated, and your incomes becomes pure and halal. The trading incomes from a Sharia compliant stock is considered absolutely permissible. There is no purification involved in it. The reason being, what the scholars say is, once a stock is considered Sharia compliant, you are gaining something out of it by virtue of trading in it or by virtue of investment in it. The impure income that the company is getting is not directly affecting the value that you get the appreciation that you get or the return that you get by holding or being the owner of that stock. But the dividends that you receive definitely has a component of the impure income that the company has received. Hence, calculate the proportion of impure income, apply it on it, remove it, and purify it. Hence, dividend purification is applicable only on the dividends and not on capital gains. Muhammad says, SC Malaysia has list of Indian stocks. No, they have only Malaysian stocks. Islamically has Indian stocks. So do subscribe to Islamically and you can get a list of all Sharia compliant stocks on Islamically. Waqar Ahmad says Islamically just state pass or fail status or their actual ratios. Islamically gives you transparency in terms of which ratio is failing and which ratio is passing. We do not give out the full ratio for two reasons. One, it requires a lot of licensing from the various service providers that we have to disclose if you have to disclose the numbers, and the entire proposition would become very, very expensive for users. Two, through these webinars, through the free content, through the Sharia scholars that we have given, through the pedigree that Islamically has, there should be trust that has to be given out to any of the screening providers that you follow. Let's say, for example, if somebody tells you that this is a problem and he's an expert in that, right? You should agree to that. Else, calculate your own financial ratios or do your own research and follow your own methodology. If you're coming to Islamically, if you're coming to S&P, if you're coming to IOFI, or if you're coming to Dow Jones or FTSE or any of these screening providers, right? Once you are happy with their credibility, once you're happy with their processes, once you're happy with their quality mechanisms, just go by that. There is absolutely no gain in terms of deciphering things again and again to the micro level and asking for micro level data. It doesn't make sense. It's just going to make the entire proposition very, very expensive. But yes, if you have the expertise of doing all of these things, we are giving out the knowledge out to everybody. All of these sessions wherein I give out the explanations is from what I've learned from the Sharia scholars in the hundreds of Sharia board meetings that we've had, is that if you don't trust Islamically or other service providers, the knowledge is with you. Go ahead and do the screening yourself and follow that. It's very transparent. Brother Ali says that, can Islamically use all criteria or maybe two for Sharia compliant? It is good to be broad-minded. Yes, it is good to be broad-minded, but you need to have a criteria. You need to be within certain boundaries. And we have a scholar board that we have. Let's say, for example, a couple of our scholar boards, the scholars in our board are also part of IOFI, are also part of Dow Jones, are also part of S&P, part of MSCI. So the criteria that they have given us is a combination of all of their learnings. And they felt that Islamically, being a B2C company, should follow this criteria. And this is the most popular screening criteria in the world. Hence, there is no point of having multiple screening criteria and taking the best of those worlds. Stick to one criteria. If it's compliant using that, it's fine. If it's non-compliant using that, we have to accept it. We can't be in the best of both worlds. Someone is asking me a private question which says that I have learned from his stockbroker that an intraday shares purchase will not be credited to our account. Therefore, in Sharia, we cannot sell it until we receive our shares in our account. As per Islamically, I have already explained this, my dear friend, that there is a difference between delivery in your digital account, that is DMAT account, as you have said, and owning that stock. There's a difference between these two. For a detailed answer about whether intraday thing is permissible or not, please refer to our webinar about intraday trading. It's on the YouTube channel. You can see it in the playlist. Secondly, there is an article on our blog as well as on the app, which talks about intraday trading as to why we think the Sharia scholars think it is permissible. Have a look at that. Right, that will give you all the answers that you're looking out for. Intraday trading is permissible if you comply to certain rules as mentioned in those articles. Do not get confused between ownership and delivery in your account. Brother Jewel is asking a very good question, as why is there a gray area with weapons? Certain Sharia scholars think that manufacturing weapons is repugnant to Sharia, is not in line with Islamic values, because a lot of these weapons are being used to have oppression on humanity, right? Whereas the Islamically Sharia board thinks that manufacturing of weapons is a Sharia neutral activity. The user of that weapon can make the usage as permissible or not, but the manufacturer is manufacturing a weapon. Let's say, for example, a gun which can be used to defend yourself, or it can be used to attack anybody else. So manufacturing of weapons cannot be considered as a Sharia non-permissible activity. That is the two schools of thought. That is the two differences between our Sharia board and some other Sharia boards, wherein they consider it as non-permissible, whereas our Sharia board considers manufacturing of weapons to be Sharia neutral. And there's absolutely no problem in terms of manufacturing weapons. It's the ultimate user who is going to decide whether he's going to ethically use it or use it otherwise. Brother Umar is asking about a mutual fund, whether it is Sharia compliant or not. As of now, we don't cover mutual funds. Inshallah, very soon we will be covering them, and you will get to know which funds in India or globally are Sharia compliant or not. Babu is asking a question. My question is, what is the required time to buy and hold the stock in order to be halal? Because I understand day trading is not halal. Intraday trading is halal. There is no specific time limit. Intraday trading subject to buying first and selling later, subject to selling it only when you have fulfilled the conditions of your broker that you become the exclusive owner of the stock. Things can be sold after that. So there is no specific time limit between buy and sell. That time limit is governed by your broker or your local markets as to when after you execute or trade you become the owner of the stock. Remember, there's a difference between delivery and becoming the owner of the stock. Read our articles as well as read here our webinar on intraday trading. Brother Ahmed is asking, is any timeline planning to screen ETFs, and is Islamically going to offer their own ETF? We're not too sure on both. I don't think we'll offer our own ETF. We are in the business of telling you what products are compliant and what products are not. We are not in the business of giving our own product as of now. So I don't have a timeline as to when we will start ETF screening. Brother Shihabuddin is asking a question. Not sure what he's asking. He says IPO will affect the share of the company. Then after we purchase share from others, how affect this halal or haram? I'm not sure what you're saying. Essentially, what happens is when a company IPOs, Islamically screens that company and tells you whether it's Sharia compliant or not. After that, even post IPO, if you purchase or sell shares, it is Sharia compliant. It has absolutely no problem, as long as when you're buying the share, it is Sharia compliant. So come on Islamically, subscribe to the markets that you're looking out for, find out if that stock is Sharia compliant, and you can buy it. There's absolutely no problem in it. Another question is being asked by Muhammad Zulhaikal. He says, is credit card system provider considered as non-permissible? Yes, of course, a credit card system provider is considered non-permissible. But your subsequent question is such as Visa. Visa is not a credit card system provider. Please look at our article that we wrote about payment processors and why we consider Visa as Sharia compliant, MasterCard as Sharia compliant, American Express as non-compliant, PayPal as non-compliant. Right? Please go read over there. Visa and MasterCard clearly are not credit card systems provider. They do not get any income from operating interest income. Their revenue model is not dependent on collecting interest income. We were one of the first to figure this out because we were the only people who were looking in depth at such companies. We have got massive amount of appreciation from scholars around the world when we had made MasterCard and Visa Sharia compliant. So MasterCard and Visa are Sharia compliant. They are not credit card systems provider. They do not earn money from interest income as part of their operating income. Please go read the article that we've written about compliance of payment processors, which is available on the blogs of Islamically, as well as in the article section of your app. Yes, somebody's already put that article up. Thank you. Is it possible to know the company debt ratio when it is non-compliant? I've already answered this, saying that it becomes a very cumbersome activity and it becomes a very expensive proposition in terms of sharing the data. Someone has asked us a question as to how do we deal with zakat on stocks? Should be paid annually or after selling the stock? As of now, we haven't looked into this, and I do not want to comment on it because I'm not an expert on it. Someone has asked a question. Our company invests in spot gold and silver, which is more than 75% of our portfolio. Is spot gold regarded as hedging? We do not invest in options or futures. Buying and selling of gold and silver on a spot basis is definitely considered a Sharia compliant activity. So buying and selling of gold on a spot basis is Sharia compliant. No problem in that. Brother Abdullah, he says, I'm using Islamically for selecting Sharia compliant stocks to invest in the Indian market. How is the screening criteria for TASIS? Because few of the stocks like ONGC, BPCL are compliant in TASIS and non-compliant in Islamically. What is the debt threshold difference between Islamically and TASIS? TASIS is using assets. Islamically is using total debt, is using total market capitalization. I believe TASIS has a debt to total asset threshold of 25%, whereas Islamically has a total debt to 3 years moving average market capitalization of 36 months. Hence, there could be a difference in the results. Muhammad Zulhaikal has asked a question. How do you determine non-permissible business from unclear breakdown? For example, the breakdown is beverages, but how do you determine the threshold of alcoholic drinks if they generate? That is what our expertise lies in, right? So we have systems, we have processes, we have our own research methodologies through which we figure out what is the non-permissible revenue given from the company's stated businesses. Yes, there is some amount of estimation that we have to do, but everything has a methodology which is approved by the Sharia board. The first thing that we always rely on, we are primary researchers, is we rely on the direct communication that we receive from the companies through channel reports, through shareholder presentations, through its websites, or through a direct communication with the investor relations of the company. Mohyuddin is asking, what is the justification to the rationale behind allowing 5% threshold in the non-permissible interest income taxes as 0%? The justification of allowing a 5% threshold, and this is the most common threshold that a large number of scholars agree to it as well, is also because we are not trying to invest in companies which are cognizant of the fact that there is a world of Islam, right? They're not cognizant of the fact that they need to run their companies in a Sharia compliant manner. It's the other way around. Companies are running for profit. They are running the way they have to run things. As Islamic investors, to create wealth, the Sharia scholars have created a criteria that if a company satisfies this criteria, it is allowed for you to invest in it, right? So it is creating an avenue for you and me to create wealth and to be part of the economic system. Given the fact that we know that the entire economic system is not Islamic, given the fact that we know that not all businesses or majority of businesses are not cognizant of the fact that they need to appease to the Islamic lifestyle. Hence, thresholds have been given that if a company falls within these thresholds from a business sector perspective, from a financial research perspective, it is reasonably fine for Muslims to invest in it. Hence, these thresholds have been given. So it is not that up to 5% is allowed and less than that is not allowed. It is a tolerance limit that has been set. It is not an acceptable limit. It's a tolerance. So companies having less than 5% non-permissible income does not mean that up to 5% non-permissible income is fine. It actually means is that Islamic investors can tolerate non-permissible incomes up to 5%. Why 5%? There is no hadith which talks about 5%. It just talks about negligible amounts. A negligible amount of impurity will not affect the purity of the entire thing. That is the paradigm that the scholars follow. Now, what is this negligible amount? Some scholars have put it at 0. Some scholars have put it at 3%. Some scholars have put it at 5%. Some at 10%, and as you can see in the SC Malaysia has for certain non-permissible activities has put it at 20%. So that's where it is, and that's the logic about it. Brother Faris has asked a question. He says a company is new, right? And it fails the accounts receivables ratio. And his principal question is, since this company is new, it does not have a 36 months average market capitalization. The logic over here is that if 36 months average capitalization is available, we use that. If there is a shorter period, we use a shorter period one. That means if a company has been trading for, let's say, for example, just 20 months now, the denominator will be the 20-month average market capitalization. For companies like Apple and Facebook, which have been listed for more than 3 years, the 36 months average market capitalization will be used. So if a company is new, for all the new IPO companies, the market capitalization is used from the day it got listed till today. If it is more than 36 months, then it keeps moving on to 36 months. I hope I'm clear. Muhammad Jahid Hussain has asked, when are you going to update the iOS app? There was an update about 3 weeks back, and there will be another update in the first part of next month for iOS as well. We already updated. There were a couple of bugs in the last version, but the current version, which is available on the iOS, is stable. We haven't heard or we haven't got any crash reports for that. So yes, it is updated. If you're referring to that, the next update is going to come up in the next month. Brother Iskandar says the gains that has to be donated on a stock that has turned to be non-compliant are calculated from the day the stock has turned to be non-compliant or in the period of 60 days. You're right. If a stock has turned non-compliant, you have 90 days, okay, to sell that stock out. First 30 days to watch out if that stock has turned non-compliant, it has turned back to compliant, and if it does that, there is absolutely no problem. You are as is, that means you continue being invested in that stock. From the 31st day till the day you sell the stock is the period that you have to watch out. The stock price on the 31st day minus the stock price on the day you sell will be your capital gain that has to be purified. Okay? To be precise in between dates. Brother Bakar AG Tatam says that, do you give any special discount for pensioners for subscription fee? Rather, for the Islamic New Year, Monday, Tuesday, Wednesday, we are giving out a super duper offer. Please do look out for the email. If you're eligible, only a few subscribers will be given this offer who are active on the app. Look out for that offer, and I think you'll like it. Monday, Tuesday, Wednesday. This Monday, Tuesday, Wednesday. But the Sohail says, if we have any question, can we email you? If you have any questions, we have a discussion forum on the app where you can post the question and we endeavor to reply as soon as possible. Two is, if it relates to a specific stock, you can start a discussion under that stock. So we have these avenues. If it doesn't fit in both of these things, then you can WhatsApp us using the app itself. Go to the profile and click on the WhatsApp icon over there, and somebody will be able to help you with the answers. Else, you can email us to info@islamicly.com as well. Last few questions before we wind up. Inshallah, I have already exceeded the time limit today. Syed Mohyuddin says, if a stock I hold is found to be non-compliant and the current price is lower than the purchase price, can I average the stock and sell it after recovering all the capital losses? If a stock that you hold currently is trading in a loss and that stock is non-compliant, Sharia scholars prefer that you sell that stock, book the loss, and move ahead in life. But they also allow that you can hold it till the time it comes up to cost. And when it comes up to your buying price, sell it and get out of that stock. But making a gain on a non-compliant stock is definitely not permissible. So yes, you can hold on to that stock till it recovers to the buying price that you put in and then sell it. Syed Fayaz is asking me, what is your opinion on Forex trading? Forex trading on a spot basis is Sharia compliant, but if you are referring to all of these apps which are there on the internet, like Olympian and iForex and stuff, definitely they are non-compliant. You don't even know what they are actually doing. It's very akin to gambling. That's what my opinion is, my personal opinion, not the Sharia scholars' opinion. Brother Ali is asking, can you explain again dividends cleansing, the time frame to cleanse dividends? Thanks. Brother, there are an article on the Islamically blog about dividend purification. There's a video also. Plus, we did a webinar on dividend purification. For real good detailed information, please do refer to that. Essentially, you don't have to do anything about doing dividend purification. On every stock on Islamically, there's a purify option. Click on that, input the amount of dividend that you receive from the company. It will throw you an amount. That amount has to be purified. Purified would mean that amount has to be donated to charity. You can give it to anybody that you like. Abdullah Kunhi is asking, why is Reliance Industries non-Sharia compliant? Reliance Industries is non-Sharia compliant because it fails the debt ratio. If you are referring to the statement by the company management that Reliance is net debt free, there is again a very detailed article on our blog section as to why is Reliance non-compliant, in spite of the fact that they made a statement that they are net debt free. Someone is asking me a question, is gold ETF allowed? In principle, gold ETFs are Sharia compliant. I don't know which gold ETF you are referring to, but if they have a Sharia certification, and if somebody is certified that they continue to be in a operate in a Sharia compliant manner, then yes, gold ETF should be Sharia compliant. Muhammad Zulhaqal has posted a comment which I don't want to read out, but thank you. We've reached the end of the question, the end of all the questions. Are there any halal investment companies by Muslims or non-Muslims? All the stocks which are given out on Islamically are considered halal if they have a green symbol, and the ones which are in red are non-compliant. You are free to invest in any of the companies in any of the markets which are screened by Islamically on the Islamically app and certified to be Sharia compliant. It is not a criteria whether the company is owned by Muslims or non-Muslims. That is not a Sharia criteria as of now. Hence, more than 40% stocks globally, coming up to trillions of dollars worth of value, is considered Sharia compliant. Anyway, we've reached the end of this webinar. Thank you. I hope this has been useful. We have covered in the last 3 webinars what sector screening is, what financial screening is, and in this webinar today I have covered the differences in criteria, and in brief I have also talked about as to why there are differences between the most popular screening criteria. Thank you for being with us, and the last question which Syed has put up: what if a stock turns compliant at 60th day? What do we do? If a stock turns compliant on the 60th day after it turned non-compliant, you will have to purify from the 31st day to the 60th day and continue to hold if you wish to from the 60th day onwards. Simple. Brother Umar is asking a last minute question. He says, recently fund of funds and international opportunities funds are the top ranked ones in terms of last 1 year returns. What's your opinion? If that fund has a Sharia certification and if they claim that they are Sharia certified and they are in compliance with Sharia norms, you can definitely invest in it. If they do not have any certification, then stay clear of them. The easiest way to manage your money in the equity markets is to download the Islamically app, subscribe to the markets that you use, open an account with a stockbroker and do it yourself. Brother Abrar is asking a very interesting question. When company share gets swapped to non-compliant share, what should we do? If you have investment in a compliant company and due to a merger or an acquisition, you now have a stock of a non-compliant company, definitely you have to sell it immediately, and you don't have to purify till the time you held the Sharia compliant stock. Very, very simple. So if you held a stock of a compliant company, that company got merged and you had a share swap, and you now have the stock of a non-compliant company, you need to sell the stock of the non-compliant company immediately. The gains that you have got while you held the compliant stock is to be retained, whereas the gains that you make on the non-compliant stock that you received has to be purified. Brother Umar again asked like whether a mutual fund in India is Sharia compliant or not. My answer is we haven't looked at that. We will not be able to answer any third-party products which we have not looked into. Very soon we will bring up investment opportunities from certified products on our apps. We're looking to work on that. Thank you for your time. Please do review us on the app stores if you like us. All of these free webinars are given out so that you build trust and transparency into what Islamically is doing. Please do send us a review on the app stores. I really look forward to the reviews, which is going to not only help us, it's going to help the fellow investors build credibility on Islamically. And if you think we are doing a decent enough job, please do subscribe to our plans. We have a monthly, quarterly, and an annual plan. Look out for the offer on Monday, Tuesday, and Wednesday. If you are in the eligible markets, you will get a really good offer to subscribe to Islamically. Abrar says the sell has to be done before the swap date or after the swap. It has to be done on the swap date, because till the swap date you're holding the compliant stock. On the swap date you're holding the non-compliant stock. Simple. You can do it notionally also. That depends on you. So hence, Jazakallah khair for joining us, and apologies for not doing the webinar last weekend. I'm not sure what is the topic of the next webinar, but we look forward to joining us in the next webinar. And do subscribe to our YouTube channel. Do subscribe to the Islamically app. As please do give us a review on the app stores. Thank you for your time. And if you like what we are going to do review us and subscribe. Jazakallah khair. Assalamu alaikum wa rahmatullahi wa barakatuh.